Hi everybody, it's Constance with MeetConstance.com. I'm on a mission to eradicate entrepreneurial poverty. And the method in which I have found to be the most effective to accomplish this goal is profit first. And so today I want to talk about the behavior part of money and cash flow as it relates to our businesses. So we all know about the GAAP principle of accounting. The GAAP principle of accounting is what every bookkeeper uses, accountant, CPA. We have been taught for years about the GAAP principle of accounting. Every business runs by GAAP. Every organization that you worked in the past, currently, all use GAAP. The problem with the GAAP principle of accounting is that it goes against human behavior. Let me give you an example. If you're a chain smoker, for example, you know that smoking is not good for you, but you still do it. It's the same thing. We know we should put our profits first within our business. Logically, we know we should put our profits first, but we don't do it. We know that we should be putting money away to cover our taxes, our payroll, to cover our profits, owner pay, but we don't do it. Why? It's because the GAAP principle of accounting, which is defined as sales minus expenses equals profit. Well, this principle is flawed because when you look at human behavior, is that as our sales increases, our expenses will increase as well. And so what will happen is that our profits will continue to decline. This is basically logical. It's logical to take your sales, subtract your expenses, and then whatever's left over you keep for your profit. But this is not, in order for us to be effective and successful in our businesses, we have to go with our natural tendency. So the GAAP principle of accounting is not an effective way to grow your business. And when you implement the GAAP principle of accounting within your business, it makes it really difficult to be able to accomplish your financial goals. The profit first formula is sales minus profit equals expenses. You pay yourself first. You're the most important part of your business. You brought this business into fruition. But oftentimes what we do as entrepreneurs is that we get our revenues in, we pay all expenses, and hopefully there's enough left over for us to get paid. We compromise our profits, we compromise our owner pay, and we compromise our taxes. Profit first says for every dollar that comes in, you're going to take 10 cents for your taxes, 10 cents for your owner pay, 10 cents for your profits. And then out of the 70 cents that is left over, you're going to use that to pay your expenses. And if you do not have enough money to pay your expenses, you cut down on your expenses, but you never compromise your profit. And often I get asked, well, Constance, my business is not making money now, so how do I implement profit first? It is when your business is not making money that you should implement profit first. It's when you're just starting out that you should implement profit first. You find a way in which you can adjust your numbers to ensure that you're able to take your profits out first. Now, it may not start at 10%, you may start at 1%, but the most important thing is to just start. Because what will happen is that as your revenues continue to grow, your expenses are going to continue to grow, and then your profits are going to continue to be minimized. And that's why most organizations fail, because they don't have enough money to be able to weather those really, really tough times. And oftentimes when you implement the GAAP principle of accounting into your business, you're likely to have more debt, you're likely to be less profitable, you're likely to owe in taxes, and it's really, especially for the small business where we don't have that kind of cushion. We don't have years and years of cash reserves that we can tap into when the economy is bad or when one of our clients doesn't pay. We don't have those kind of reserves. And so the GAAP principle is especially dangerous to the small business owner. And so profit first is really simple. You bring in all your revenue, you subtract your profits, and then whatever is left over is what you use to pay your expenses. You don't have enough money to pay your expenses, you start to cut down on your expenses, but you pay yourself first. If you want to more information on how to implement profit first within your business, click on the link below, and I'll see you next week. Bye-bye.